Well, Zach, I sent Zach an interesting article from the New Yorker, which we both looked at and agreed it was relevant to his thesis. The article was about how a report that kind of got leaked out from BlackRock um, basically concluded that people, institutions who had been divesting from, you know, carbon heavy companies had not been losing money. In fact, they'd probably been making more money than those that had not. And so that's made some waves. I don't know if you want to comment on that, Zach, before you get into your presentation.
Yeah, it's interesting to see. It's the kind of first big or very famous people that divest. I mean, kind of outside of hippies like myself, was the Rockefellers. Their money, which came from oil. Actually, in 2014, they fully divested for the purpose of. I think there was some ethical reasons, but I think it was largely driven by greed and having a better return. And so they have had over that period, fossil fuels have declined pretty significantly over that period of time. They had a rebound in 2021. So it'll be interesting to see how that continues going forward.
Well,
Yeah.
On this same thing as kind of a introduction to Zach as well. So one of the things that I think older guys like me are perhaps more surprised about is how um, how militant the thinking is in the younger generation about carbon, right? I mean, old guys like me probably are more commonly thinking, well, this is a nice to have. I mean, this is something we should do probably. You know, it's a thing we should probably do. And the younger generation is thinking this is something we have to do. I mean, this is something that is urgent. This is something that we cannot not do. And so I think that's part of the thinking behind Zach's company startup and business thesis. So I'm going to let Zach introduce the Carbon Collective, but that's kind of a quick introduction.
Perfect. Thank you so much, Howard. I'm going to go ahead and share my screen here, and we're going to head on over. Thank you so much for joining. So love to start always just with a really quick summary. We are building a new financial platform that is 100% focused on climate change, and we're focused on investing because ultimately we believe that ethical investing is broken. And that the future, you all might be familiar with ESG as a platform, and we believe that's fundamentally the wrong fit for how individuals want to participate ethically in the economy, and that the future of ethical investing is thematic and impact focused. And we believe the largest theme by far is going to be climate change. We've launched our first service, which is a climate-friendly Robo advisor back in November. It's been going really well. And with this round, we are going to be launching our next service, which are climate-friendly 401ks. I am pleased to say that we are oversubscribed on the round. We're raising $1 million. And so we're just looking for any additional folks who can really bring strategic value to the company at this point. Quick background on myself and my co-founder. We go way back. We've known each other since we were 4 years old. We grew up, I'm in the Bay Area. We grew up here in the Bay Area together. This is our second company that we've started. Our first was in a different space within sustainability. We were building, helping a dirty industry get cleaner by building a novel optical sensing system that would allow fish and shrimp farmers to deploy real-time sensing into their ponds for the first time. We raised a large seed round led by Venrock for that and could not commercialize the technology. So at the beginning of 2020, we set out to focus on what had arisen, kind of as Howard said, to concern us most, which is climate change. And we set out with a thesis that one of the greatest pains of the 2020s is going to be the mismatch between what you feel as an individual when you face global climate change, like here in the Bay Area, when the sky is orange and there was smoke in the sky for 2 months, and now that's a regular occurrence. That feeling of how can I protect my children, and the lack of tools to really be able to collectivize our action and take power in that. So we knew that we wanted to take a teaspoon of that pain and move it towards action. And so in studying this, especially from an individual perspective, the source of your carbon footprint is really your money. Where you save, how you buy, and what you buy, these are the tools that we collectively can use to push the economy closer to one in which we achieve full decarbonization, and one that's more entrenched in the status quo. But the problem right now is that you have to make a choice between your ethics and your finances. It costs more to invest sustainably and to bake sustainably and to buy technologies that help you go green. So that's why we're building a new financial platform that is 100% focused on climate change. So you can do both, and you can save money and the planet. But we believe in order to get people to feel confident to move on to a platform like this, you really have to hit three tenets. The first is that it has to be truly impactful. So this is clear and quantifiable, and not just less bad, which is so much of what ESG is, but actively good, the companies that are building solutions. The second is it's financially smart. You strip away everything that makes it green. It still needs to be a smart thing to do with your money. And the final thing is it's human-centric. Walking the path of sustainability is often confusing and lonely. And so having someone to hold your hand along the way is really important. So with those tenets in mind, we launched our first service back in November. It's a climate-focused robo-advisor. It is a drop-in replacement for a Betterment or a Wealthfront. It's got the same low fees. It is very highly broadly diversified, but truly has no fossil fuels and invests in the companies that are building solutions. So I'd love to quickly walk you through how we build our portfolios. So I actually don't have that slide on here. I'm just going to explain it really quickly. There are a couple of parts of the market. There is the low carbon economy. This is 80% of the stock market that doesn't depend upon fossil fuels for their core business. These are the companies that we at Carbon Collective can use our collective shares and our brand pressure to push them to go faster, because they're the customers of the fossil fuel companies. And so we need to get them off of fossil fuels and move as fast as we can. And then we replace all of the parts of the sectors of the stock market that depend upon fossil fuels. We replace those with the companies that are building solutions to climate change. We call it the Climate Index. And so that's what we've launched, and it's been growing quickly. We now have 3.5 million on the platform. We have over 80 active members, and our average account size is quite high. People are moving their full retirement funds over with us, which has been really exciting. And we believe the reason is because there's nothing else like it. If you're looking to do sustainable, green, climate-friendly investing today, you pretty much have the option of green funds, which are highly impactful companies, but they're not a great investment. It's really expensive and not very diverse, or ESG funds. And we started this company in realizing that ESG is fundamentally the wrong fit for how individuals want to participate ethically in the economy. When they want to participate ethically, they are looking for transparency, and they are looking for really clear impact. And ESG, by its very nature, being predicated upon proprietary data, which each company has its own data set and that they won't show you, they're basically the Vanguards and the BlackRocks of the world are basically saying, just trust us. And people don't trust them when it comes to ethical issues, like they trust them when it comes to financial issues. So we think that there's a significant opportunity to build portfolios that remove all the reasons to say no to ethical investing, so they're diverse and low fee, but have a really clear high impact.
So Zach, can you just go back to that one slide? So can you explain do a little bit more of a explanation for the differences, for example, between you and the Betterment climate impact portfolio? I mean, is the difference purely one of transparency, or is there more to it than that?
It's of transparency. So the Betterment climate impact portfolio is about 5% fossil fuel companies. So there's just a lot of greenwashing happening there. There's no outsized impact for renewable energy companies. What's missing here is that, and this is, again, goes to our thesis of what is the future of ethical investing, is nobody likes ESG. Nobody's excited about their ESG platform. They hold their nose and do it because it's less bad. And Wall Street loves it because they're making extra money for it because they can charge more. And so the future of ethical investing is thematic, where you can have a clear through line that you can build an investment portfolio on, and will be focused on impact. So how do we use our shares to push companies to go faster, not just make money from them? And so that's what we're trying to bring to the market. So this is one of the questions I get often, which is all right, how's this defensible? And our goal, like from a Betterment, for example, couldn't they just do this? Our goal is we want to put ourselves in a position in launching our own funds that the Betterment climate impact portfolio is made of Carbon Collective ETFs. and ideally carbon collective ETFs that were built in partnership with a Vanguard or with a BlackRock. Because who we want to replace is the analytics companies that no retail investor has heard of, that is used to make ESG funds, and be that recognized B2C brand in the space. So far, people really like it, which has been great. My favorite testimonial is I've been with Vanguard for 20 plus years, and you guys managed to displace them after one conversation. This is someone who he moved because he believes that it's also just genuinely a better investment, which again, we wanted to remove every reason to say no to sustainable investing. And we believe that there is a growing number of people that they want their brands to reinforce their values. We are identity stacking here in the US, and we're doing it hard. And that for these people that want their brands to reinforce their values, who do they trust? They trust brands like Patagonia, Everlated Method that have really great products, but really clear transparency and clear impact in what they do. And we believe that a large segment of the market want such a brand for their finances. And for the first time ever, for millennials and below, climate change is the #1 issue across generations. And unless we dramatically change the trajectory of our civilizations, that's not going to change over the next 10 years. So they want a Patagonia for their investing. But right now, it doesn't exist. There are some individual companies in these spaces, but they fail our core tenets. You have to pay a lot more, and it's really unclear impact. And so we want to build across this space and occupy what is right now an open landscape at the intersection of climate and publicly traded companies. So we've started with our Robo advisor. And as the wave of demand comes, we're going to be next to be launching our climate-friendly 401k service. We're really excited about donor-advised funds. We think there's a lot of climate charity sitting on the sidelines. So how can we get it into a fund where the donors actually upvote what charities it goes to, and then build up enough AUM that we can launch our own ETFs and have a lot behind them right out the bat. And again, this is that position where we can start going up market and into other channel partners. Because ideally, when we have those college students who are pushing on their endowment to divest from fossil fuels, we should have something that they're also pushing towards, what they should be investing in what is having that really clear impact. So that's the foundation that we want to build, become that expert and that thought leaders at the space of publicly traded companies and climate. And we think that it'll put us in a real interesting position to do a lot of really cool things. One of them is focused on individual decarbonization. One of the greatest challenges of solving climate change is going to be the fact that we're going to need to get every single home and every single car in the US to transition to being climate friendly. It's going to cost the average family $80,000 to do it. The good news is that things like solar and electric cars do pay for themselves over time, but the financing doesn't make it really sexy to do that. You can get a solar loan right now, but save like 5% on your electricity bill. So you kind of just have to want to get solar, or an electric car, they just cost more. And so that ROI point is really long in the future. So what if we can use your AUM as collateral with us to make that loan a lot more interesting and give you a 10-year car loan, for example, instead of 5. So you're paying $220 per month less right off the bat, which makes going electric a complete no-brainer. So we want to, right now, there's this spark that is growing. Climate tech wasn't a thing 2 years ago. It is happening. That we want to scale this activism so we can get to that point of pragmatism of just making it cheaper. So right now we're really focused on customer referrals. Our goal for this round is in growth hacking to become the preferred way that the climate community invests. So we're in a lot of those communities. And then content is really important, of establishing that expertise at the intersection of publicly traded companies and climate. We want to do that until we can get to this flywheel where we can start operating with scale. And that's where we can get doing the activism, where we're pressuring companies, particularly consumer-facing companies that have brand risk. From when you have 10,000, 100,000 retail investors of theirs that are pressuring them on climate, they're going to listen. Look at what's happening in Georgia right now with these companies and how they're dealing with the politics of that. We have power as individuals to push on these companies, and that's what we want to take from. And in doing that, with every success that we have of pushing a company, it increases our power. We have a network effect that starts to work for us, where we can bring more people into the platform, more people onto our ETFs, to leverage that impact, which will then in turn allow us to achieve more with these companies and continue growing and growing and growing. We're going to be launching our 401k service. Happy to answer questions on that in this next round. And ultimately, we believe that decarbonizing your life has to be emotionally and financially rewarding. And it's that last part that's not fully there yet. And that's what we want to add. So next week, I'm closing this round up. We've hit our goal of 1 million. We've got some great investors on board, and we're looking for other people who have expertise, especially a community like yours in fintech, to be coming and joining us for this journey. So with that, I look forward to your questions.
Any questions? So maybe one quick question before we're kind of out of time, Zach, but
Yeah,
can
no
you
problem.
elaborate a little bit on your strategy of becoming effectively the index that other big players use? In other words, you want to leverage the Vanguards or the Fidelities of the world to help you reach scale and influence. So can you explain that a little bit more?
Yeah, so right now, when a Vanguard goes to a retail investor, it says, hey, do we have this ethical portfolio for you? They say, it's made by this company called MSCI, this analytics company that you as a retail investor has never heard of because you're not in finance. We know that you want to know how it's made because it's, your ethics. But we actually can't tell you any part of it because that's all proprietary, their proprietary data, because that's how MSCI makes their money, is with that type of proprietary data. So you just basically have to trust us. So that's the problem that we've seen. We conducted 120 hour-long interviews with individuals on this subject. It found that people do ESG, but again, no one is excited by it. They're doing it because it's less bad. And it's the best of bad options. And so we believe that we have the potential not to replace Vanguard, but to replace MSCI. In that by building what is a much harder path, a B2C path into this, that we could be creating that brand. And that's why especially focusing on the climate community so early and building that trust and that reputation is so important at this early juncture, that we could be in a really strong position to collaborate with them. And then especially as we start getting those impact wins, we could be off to the races in a way that I don't think anyone could catch us.
One last question, question from Allison in Washington. I'm going to read it. How are you measuring impact? Is your expectation that consumers will put 100% of their funds with you or just a fraction?
Yeah, so our goal was to build portfolios that people felt comfortable putting 100% of their funds with. What we found is that past attempts at this, which would be like a collection of 50 green stocks, for example, people treated like climate charity. And so we wanted something that you could move your whole IRA into. And that's what we've seen. People have moved their whole financial lives over to us. So our portfolios directly track the 80% of the stock market that is already low carbon. And so it's pretty much broadly a market tracking portfolio. And then you have that impact in the 112 companies that are building climate solutions. And these get updated annually. So that's very much our goal how can we unlock the IRA money for you, because your financial security is really important. You're not going to risk your retirement fund on something like this. And so it's really important that that feels secure and comfortable as well. Our goal is to build portfolios that were market tracking, and they very much, we could backtest our strategy pretty easily. And they tracked the market quite closely until 2019, in which since then they've had pretty positive alpha.
Rich, I'm afraid we're out of time. I know you had a question, but maybe you can connect with Zach in the gatherers break, okay? Sorry about that. And Allison, thank you for being online and asking a question. It's great to see you online, and we should catch up.